Hello guys, today I want us to talk about an emergency fund. Now, an emergency fund is money that you set aside as a reserve in case of an emergency or something that you have to pay for that comes up. You have to have an emergency fund so that you don't have to look for money when you have an urgent need to pay for something. You already have the money, you can handle the situation and move on with your life comfortably. Now, to build an emergency fund, you have to allocate a portion of your money from your portfolio to build your emergency fund. Now you are going to put money in that emergency fund slowly over time to build it over time. It depends on how much you want. Most of the time, an emergency fund is 6 months expenses of an individual. The amount of money that you spend in 6 months is what makes up your emergency fund. Now, a portfolio is where you have your various investment sources, whereby you have money that you receive from your sources of income. Now this money has to be spread so that you don't keep it in one jar. You don't put all your eggs in one basket. They will collapse. In case if you put your money in one investment source, that investment source can collapse, and you end up losing all your money. So what happens is you choose different sources of income where you will put money in different places. Like you can invest in stocks as one part of your portfolio. You can invest in crypto as another part of your portfolio. You can even start a business. You can invest in money market funds so that you don't put all your money in one place, just to prevent a collapse which can take away all your money. Now, to build an emergency fund, you need a source of income. A source of income can come from a job. Either you work or you have a job which pays you a salary. Then you take a portion of your salary and set it aside in your emergency fund so that you can build it over a long period of time. You can also invest in what I've talked about, stocks like Apple shares of Bitcoin, companies like Microsoft, Google. You can buy their stocks and shares and put your money there, which will pay you a dividend after every quarter, after every year, and there you can build your money from there, and you can use the money also to build your emergency fund. You can also put your money in a money market fund where your money earns an interest over a long period of time. Therefore, instead of putting it in a bank account where you just fight inflation and the amount remains the same year on end, here in a money market fund you can make an interest and your money grows after a long period of time. You can also invest in cryptocurrency, things like Bitcoin, Ethereum. You can buy them and they are rising in value year on year, after every year, and if you bought them, your money will increase in value as the cryptocurrency increases in value. Another source of income, you can also start a business. Start a fruit stand. You can even sell groceries, fruits, vegetables. just to generate some money. You can start selling home items like appliances, TVs, computers, smartphones. You can buy and sell them at a profit so that you get money to build your emergency fund. For those of you who own a car, you can use your car as a taxi, where you taxi people around to various destinations and they pay you. Instead of not doing anything with your car, they pay you and you build your emergency fund with the money you get there. Now, for those who are rich and those who own homes, they can rent out their properties as real estate. They get tenants who pay them rent every month, and this rent can be used to build their emergency fund. Now, when you build your emergency fund, you eventually have a net worth. Let's say your emergency fund is you've saved up to $500, which is like 50% of the population. One in every two people have $500 in their bank accounts. So, if you build your emergency fund to $500, then you can if you build your emergency fund to $500, then you have a net worth of $500. The net worth is the amount of money that you are worth, which is basically how much money you have saved up in your life. How much money you've gathered so far in your life makes up your net worth, my friend. Now, when you start building an emergency fund, where will you keep this money? This $500, you put it in a bank account. Now, go around, shop around banks, check your local bank accounts to see the one that has a no maintenance fee account, where you don't pay monthly maintenance fee to store your money there. Go get that bank account. It will be cheaper for you to save your emergency fund. Store that emergency fund there, that $500 there. The bank will keep it for you safely, and you don't have to worry by storing it under your mattress or in a drawer where thieves can break in and steal. Give it to the banks. They use it to invest. When you need it, you can always take it from them. Now, when you get a bank account, make sure you sign up for a credit card. Credit cards have sign up bonus points which you can get when you use those credit cards or when you spend the money in your bank. These credit card sign up bonus points can be used to get discounts when you purchase goods online using your credit card. You can get airport lounge access when you're on an airport going for vacation. You can access the lounge because you have enough points to pay for accessing the lounge. You can also get insurance for online shopping when your things are stolen after buying with them using the credit card. The credit card company can give you back what was stolen because you used that credit card to buy that item. Make sure you repay your credit card debt on time to build your credit score. Now, a credit score is used to qualify you for a loan. Make sure you pay any loan you have on time so that you have a high credit score and you can qualify for more loans. Now, when you qualify for a loan by having a high credit score, you can use it to take a mortgage. Let's say you want a property, you use the mortgage to buy your first property. If you have a lot of emergency fund, you can use it as a down payment to get your first property. You can also get an auto loan where you buy a car using a loan. You pay a down payment, then you pay monthly loan payments to the bank to repay for your car. You'll own it after a long time when you pay those auto loans. Then there is credit and debit card loans. You can qualify for higher credit card loans if you have a high credit score. That's it for today. Make sure you like, subscribe, and comment below. I'm Michael, by the way. See you next time. Bye.